Welcome to Access to Business Opportunities. I'm Thomas Stevens, your host. Today with us, we have Paul Curry with Marshall Financial Group. Welcome to the program.
Thank you, Thomas.
This is going to be a great show. I know we're coming up on tax season, and you're the man to get us prepared.
Absolutely. This is the high time of the year. Dangerous opportunities as well.
Okay. Well, let's start off by tell the viewer some of your background. What makes you the expert in this area?
Thomas, I've been practicing for 28 years as an accountant. I specialize as a tax practitioner and advisor to small businesses as well.
Okay. So you have a lot of clients, I would assume, and I've known you at least a decade or more, and I'm just thankful that you're on the show today. Let's get into some of the key questions. What do businesses need to do to get prepared for tax season?
I'm gonna give you 3 words: organize, organize, organize. Obviously, when you are preparing your taxes, everything needs to be accounted for. Keeping the records is a critical phase of getting your taxes prepared.
Mm-hmm. Now, when client or potential clients come to you, are they more of the shoebox clients, or do they have QuickBooks? So how does that usually work?
Sometimes their QuickBooks is a shoebox itself. But actually, Thomas, people who come to me for the first time typically don't know what they need to bring. I will prepare them out of their shoebox. I will prepare them how to keep their records that year and going forward. Those who use QuickBooks may not be as skilled as they need to be. It's an opportunity for me to help get them corrected, get them on the right track, and keep better records.
Okay, so you're willing to actually give them a list of things they need to bring to you ahead of time so they're prepared that you can work with them.
Absolutely. I believe if you prepare someone when they come to you, it's going to be a better experience, less frustrating. And if there's ever a question down the road from any of the entities that ask you about taxes, you can answer their questions and get them on their way.
Okay. Well, I know a lot of the businesses out there, what they really want to know is, how can you save me some money? How can I lower my taxes? So what I'd like to do is, you gave me a great handy guide of about 14 areas that we need to look at. So I want to go down the list, and I want you to comment on that. Is that okay?
That's great, yes.
Okay, let's start out with, let's see here. Deductions for your small business. Auto expenses. What can you deduct there?
There are actually 2 ways to deduct auto expenses. The first way is simply take the standard mileage rate the IRS gives you, and you use that mileage to write off the vehicle expenses. The second way is to take the percentage of business use of actual auto expenses, okay? When you do that, you compare, am I going to take a bigger deduction for mileage, or are the actual expenses going to yield me a better deduction? You choose the higher of the 2.
And when you say write off the deduction for expenses, are we talking about repair of the vehicle, or just give me a little bit more meat?
Good question. When you own a vehicle, you have not only, if you have a car payment, the interest you can write off, plus the depreciation of the vehicle itself, but all the operating expenses, which means gas, oil, car washes, repairs, okay, accessories, detailing.
I'm getting excited now.
Okay.
All of that. Now, how much of the vehicle has to be used for business use as opposed to personal? Like I said, I'm a sole proprietorship or something using that vehicle in my business.
There is no minimum, but what's required is that you keep the mileage 2 ways. First of all, the total mileage for the vehicle for all that you use it for, business and personal and otherwise. And number 2, just the business mileage. That way you can tell how much or what percent you use of that vehicle. Then you can write off the expenses associated with that percentage.
Wow, that's great to know. So, and that'll help a lot of folks. Let's get into going into business. I'm starting up a business. Obviously, I have to do research and all that. So what can I write off?
Well, when you're going into a business, there are many expenses that you don't even think about that you may spend money on. For example, opening up an office. Well, you're going to need office supplies, furniture, equipment, computers, etc. and you may put some decorating items on the wall to make the place look good. Those are all write-offs, including all your mileage to and from those locations as well. But if you are buying into a business where it has any type of capital, equipment, or purchases, something that's a large dollar item, those items can be written off up to certain limits per year.
Now, do you have to have your business already set up and formed before you can start writing it off, or do you have to keep the receipts and then bring them to a professional like yourself? How's that work?
Well, if you're in the investigation phase of your business and you haven't started up, you keep those receipts until the time you actually start business, then you can write them off. There's a special provision for that. It's called amortization. But if your business is already up and going, you simply keep every receipt and put it in its proper place, deduct it on your income taxes from year to year.
Okay. So then if I started a business a year ago, then this year we finally set it up officially, like an LLC or whatever. You're saying I can take those expenses into this current year and write those off?
That is correct.
Wow. Another thing that a lot of people probably don't know, so that's good, really good. Any other expenses with regards to going into business that you want to mention?
Well, once again, if you pay advisors to give you some professional advice on starting a business prior to actually operating the business, you can write those fees off as well.
So why wouldn't I use an advisor who is an expert at helping me then if I can write them off?
Not only are you getting good advice, but you're getting the tax break that's associated with it, exactly.
Okay, good, good, good. And that's your legal and professional fees. You're a professional, so I'm going to bring you my shoebox full of invoices, bills, receipts, all the stuff I have. And you're saying that I can write your fee off?
Absolutely. A good accountant will save you money. You'll pay them a small fee to unlock some deductions you may not even know about until they show you.
Okay.
Okay? Not only that, they can be a buffer between you and any other taxing authority that wants to talk to you.
Like the IRS. Okay.
Like the IRS.
Great. All right. What about bad debts now? It's been a challenging economy over a couple of years. I know we're doing a little better here in Columbus, of course.
Right.
But let's say a company had some bad debts and such. How should I handle that?
Well, prior to writing off bad debts, seek a good accountant to have you set up the provision for the bad debt.
Okay.
It must be set up so that you have taken the income, recorded it as, I actually logged this sale, but I haven't collected it, then you can write it off. So it just has to be set up correctly, but there's a lot of times people miss that deduction because they think, you know what, I haven't collected it, I probably won't collect it, it's gone. No, it's not gone. You can turn it into a deduction to help save you taxes.
Now, what if you loan some money personally? You're a business owner, but you loan them some money personally. Is there a provision in the tax codes that you can still write that money off as a bad debt if, in fact, the person didn't pay you?
Well, it has to be a business loan.
Okay.
Personal loan, unfortunately, you're going to have to try to ease some kind of, agreement or negotiation with that person and please pay me back, or go to civil court, one of the two. But you can't do anything on your taxes on that.
Thanks for clarifying that, because I know that's going to be one of those issues that people think about. So, then we have, of course, business entertainment when you take clients out to lunch or dinner, and I know there's been some changes in the code. So give us some clarity on that piece.
First of all, business entertaining is taken at 50% of what you spend. Now, entertaining and meals, that is a very broad area. Matter of fact, let's say that you and I attend a business conference, and after that conference, we decide to go to an event together just to balance out the day. We worked hard, let's play hard. If I decided I'm doing that because you're a valued business associate, a good friend of mine, and we will probably do business in the future, I can write off not only the conference, but the after the conference, the meals, entertaining along with that.
Up to 50%?
50%.
Wow. Again, that's why I can see more and more people going into entrepreneurship and taking advantage of a lot of these deductions that millions have taken advantage of in the past. So I'm glad you're here today going through this.
Thank you.
Let's look at travel. Tell me more about travel expenses. What can we write off?
Business travel is a staple of how you do what you do. However, keeping track of the travel is important. If you are traveling, one important key is to have an itinerary of your travel dates. You have to have some type of business activity that you can say, this is what I did at whatever place, whatever time, in order to write off your business travel. Now, you can mix business and personal, but you keep track of the business and you write that part off. The personal is still on you.
Okay. Now, what would you consider, in that case, what would be considered a business activity, though? A business meeting, a business, what? I mean, give us an example.
Business meeting is one, conferences are another, okay? Even doing some investigation in another area outside of your home tax-based area. But as long as you, for example, I have a client who's a realtor, and she says, well, I'm going to travel to the West Coast this year for my vacation, but I'm going to also look out for some opportunities on the West Coast. Can I write that off? Keep an itinerary. If you go to businesses and introduce yourself, give a card, get some information, and map out your day. There's a 4-hour limit. You need to have 4 hours of business in a day while traveling out of town in order to be able to write that day off.
Wow. Where can someone find out all this great information? Like in the IRS tax code, or of course come to you?
You can comb the code, you can do research online, you can go to the library, you can do any number of ways, okay, of finding out information. But I think if you're a busy business professional, you want to seek somebody who's going to not only know this information for you, but help you track the future for what you may do and make sure you can write it off.
Okay, good. Now, I've started up my business and I had to take out, well, small business, I use some credit cards, maybe a little loan here. Mm-hmm. What about all that interest? Can I write that off, or can I do anything with it?
Well, interesting, most people who take a loan will maybe use it mostly for business, sometimes for personal. And they say, well, this is a personal loan, I can't take it. That's not true. Just like with automobile, what percentage of that loan money was used for business? You write off the interest on that part of the loan. And the other personal, you may not be able to, but yes, keep track of how much goes to what, business and personal. You can write off the business.
So if they used these are micropreneurs, I'm going to call them, really small, and they use the credit card, how do you segregate the personal from the business in order to track it?
Very easily, a little time consuming. Keep each statement, 12 statements for the year, highlight how much was used for business, and then we have to look at how much interest was associated with that amount and write it off.
Okay. Wonderful. This is just great stuff. Hopefully people will get a lot out of it, because save people a lot of money. So,
absolutely.
What about software? I want the latest version of whatever, Microsoft, and I've got to get my staff up to speed. So can we write off the software?
Always. You know, there's software that you can buy off the shelf, and you can even get customized software from an IT consultant. That's all a write-off. And sometimes people say, well, you know, I always buy the software, but if you use it for business, it is a write-off, it is legitimate, and you can take it.
So what I hear you telling me today here, I can buy me a computer, set up my company, buy the software, travel in my car to get it, write off the gas and all of it.
Exactly. You see, the rule is ordinary and necessary business expense. Whatever it takes, that's ordinary and necessary. If you decided you want to buy a Rolls Royce to make those trips to the office supply store, IRS may not buy that.
Right.
That's not really necessary, nor is it ordinary expenditure. But if it is something that you would do as a prudent business person, you can tie it into, this is how I did and what I do for my business, you can probably write it off.
Wow. Okay, great. And some companies like to give back, and we always love that, charitable contributions. So how do you deal with that? Can you write that off? Is it passed through? How's it work?
If you're a sole proprietor or a sole member LLC, then you would write that off on your itemized deductions, which is a form attached to your